Hi, friends. Dr. Joe here. I hope you all are doing great and welcome to this video. In this video, I'm going to talk about how a simple strategy also can make you a very successful trader. So, even if you follow EMA, that is exponential moving average or moving average or simple moving average, you can still become a successful trader. But you need to follow the discipline, you need to have the patience, and you need to have the persistence. Then only you can become a successful trader. Whether you're doing scalping, whether you're doing intraday trading, or whether you're doing swing trading, you can make money in all three. But what is most important is you should understand your strength. Because if you don't understand your strength, you will never be able to become successful in trading. Trading is like trying to take out money from a deep jungle, a dangerous jungle. If you don't know your strength, you are dead. Let's take an example of a real jungle. If a crocodile wants to eat food, it will wait for the deer to come close to the river. It will wait till the deer comes to drink the water and then attack the deer and eat. Because the crocodile knows that it is strong in the water and it has an attacking speed. But just think that a crocodile is trying to attack a deer while the deer is running in full speed in the jungle. You think the crocodile will be able to catch the deer? Impossible. If the crocodile forgets its strength and try to do something which is not in its area of strength, it will die. But on the other hand, a cheetah will run behind the deer and catch the deer. Why? Because the cheetah has good speed, light body. It can run behind the deer and catch it and hunt it and eat it. Here the cheetah knows its strength, its speed. But can a cheetah go and attack an elephant? No. Because if the cheetah try to attack the elephant will attack back the cheetah and maybe even kill the cheetah. So here the elephant knows its strength, its huge body, and cheetah also knows that drawback that if it tries to attack an elephant, it can get killed. On the other hand, elephant is huge. It cannot run behind any animal and try to catch it or eat it. So what does the elephant do? It stands in one place and it leaves. It is huge in size. It is tall, so it can easily eat leaves. So each animal understands its strength, and that is why it survives in the jungle. Same is the case in trading. You need to understand your strength. If you understand your strength, strategy is not at all a problem. There are thousands of strategies, and each strategy will make you money if you apply it the right way. If you want to become a scalper, then you need to have few strengths, like your calculation speed has to be extremely fast. You must enter a trade and exit a trade with the same speed. In scalping, you might enter the trade and within seconds you might hit stop loss. So you have to be psychologically very strong that you enter a trade and immediately hit a stop loss, and that should not affect you at all. And when you get a profit, immediately you should be able to exit the trade without thinking twice. So you have to have that psychological strength, you need to have the calculation speed, and you should become emotional less, totally emotional less if you want to become a scalper. But if you want to do intraday trading, it gives you more time to calculate. It gives you more time to understand support resistance. It gives you more time to look at the trend. It gives you time to execute your trade, put your stop loss, put your take profit. Of course, stop loss is important, even in intraday trading. Even in intraday trading, you should have strong psychology because the minute you enter the trade, probably within few minutes, you might hit a stop loss. So you have to be very strong emotionally and exit the trade when your target is achieved. Your targets will not be very long. It will be small, so you have to be fast. On the other hand, if you're doing swing trading, you have more than enough time. You have days to analyze your charts. You have days to analyze support and resistance. You have days to analyze the trend. And then you have nothing to do with the daily movements. You are looking at weekly and monthly movements of the charts. There you have to be very patient. If the price goes against you, you should not be hopeful. You should know what your strategy is. If it goes down, stop loss hit. If it's going up, you should not become fearful. A lot of traders, the minute the trade goes in profit, is full of fear. What if the price come again down? I will lose what I have earned. No. In swing trading, you need to have that patience. Wait for the price to go up and hit your take profit. So each kind of trading requires a different kind of skill set. So before you enter trading, you should think about all these things. Very, very important. Understand your strength, understand your weakness, understand the time that you can give for trading, understand the amount of money you have. Is this enough or should you work? Should you work and trade? Then you cannot have full time in front of the screen. If you're only going to trade, do you have that kind of money? All those things has to be calculated. I have created many videos in different aspects of trading. You can go through my channel, subscribe to my channel, and go through my YouTube videos. You will find videos on all these areas. But today I thought that I will just let you know some simple things. When you've decided to become a trader, do not go and start trading in every commodity or every financial instrument. In real world, have you ever seen a businessman who is selling sweets one day and then converts the business into selling steel the next day? No. Or the businessman who is selling steel the one day starts selling property the next day. No. Every business person becomes a master in their own area. If somebody is selling sweets, they become a master in selling sweets. That's when they become profitable. If you're selling steel, you become a master in selling steel. That's when you become profitable. If you sell real estate, you become a master in selling real estate. That's when you become profitable. Same way, when you are trading, you have to become a master of that financial instrument. And then only you can become profitable. So first, you should understand which financial instrument you want to trade. For that, you need to understand the fundamentals. And when I say fundamentals, it is not just ratio analysis and balance sheet and cash flow analysis. No. When I say fundamental analysis includes ratio analysis and balance sheet and cash flow analysis, plus understanding the business, plus understanding the management, plus understanding the sector, plus understanding the economy. When you understand all these things, that's when you understand the financial instrument. It is not just the balance sheet or the numbers. This will tell you which financial instrument you have to trade, but when to enter is what technical analysis will show you. Now, the beauty about technical analysis is you can use any strategy. Once you know your financial instrument fundamentally, then technical analysis, you can go with moving average, you can go with stochastics, you can go with zigzag indicator, you can go with support and resistance, because now you know the direction. All you need is enter in the direction of the trend. You can use the most simplest trading strategy, say like an EMA. Like you can see in this example, this is a chart of Nifty. You can see the price has reached a good support zone, number one. So now you know the price can go break the support zone and create a new support zone, or it can bounce out of this support zone. So now you wait. After that, you can apply a simple moving average. In this case, I have applied an exponential moving average of 50. When the price goes above 50, it's time for you to enter. But where do you enter? So you draw a new support and resistance zone. You draw a line looking at the previous support or resistance and pull the line and wait for the price to come back close to that zone. Once the price comes back to the zone, very simple, wait for the price to bounce. So wait for a couple of candles. In this area, if you get a hammer or an engulfing candle or a marubozu, even better. Once the price bounce out of that support zone, you know that you are in an uptrend. You've got a good support zone. The price is bouncing out of the support zone. Enter a trade. Don't think twice. You put your stop loss below the support zone and you enter a trade and go for 1:2. That means if you're risking around 25 pips, you go for a take profit of 50 pips. And in every single trade, I always say risk management is important. As a trader, you start with 0.5% infusion of your equity. Now, if you become a professional trader, you can increase your risk because by then you understand what risk is. But if you're a new trader, 0.5% of your equity is more than enough. Once the target is hit, you exit the trade and wait for another opportunity. But if you understand the swing, you become a little bit professional in trading, you just move your stop loss to the next swing low and put your stop loss below that. If the price comes down, the stop loss is hit. If the price goes up, wait for the next swing low. Take the stop loss below that next swing low. In this example, you can see you have taken the price to the next swing low, to the second next swing low, and you see you have almost made 1 is to 9. That means you risked 25 pips and you almost got 225 pips, almost 9 times of what you have risked. And maybe you might get more, who knows, if the trend keeps continuing. So, even a simple trading strategy is enough if you follow it with discipline, with patience, and with persistence. So, in trading, strategy is not everything. Discipline, patience, and persistence is everything. Strategy is important. Why? Because you need to backtest your strategy and then follow it. And if you become successful, you will see that strategy is the most boring thing in trading because you have to do the same thing over and over, over and over, over and over again. And when your trading becomes very, very boring, that's when you will become a very, very successful trader. So follow these basic steps, finalize your strategy, and keep it so simple that even in the middle of the night, if somebody wakes you up and say, look at this chart, is it as per your strategy? Do you want to enter? Even in the middle of the night, you should be able to say, no, no, this is not as per my strategy. Or yes, this is as per my strategy. The strategy has to be so simple. The simpler your strategy, the more successful you're going to become in trading. Remember this golden rule. And then you have to overcome your fear, your greed, and hope trading. If the price goes against you, exit the trade where you have decided. Do not think twice. And your strategy should be so simple the minute you see it, you should execute the trade without thinking twice. So, friends, I hope this video has made it very, very clear. Keep your strategy simple, understand your financial instrument, keep practicing, and you will surely become a successful trader. Friends, if you love the way I'm creating these videos, please like and share these videos. Because I love to make small videos and take one small topic to explain it to you. Share these videos with people who are struggling in trading. They will surely improve their trading. If you want to leave a comment, please feel free. I read your comments, and if I think it's worth it, I will surely reply to it too. And friends, if you're still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. Because every time I see a new subscriber, I feel motivated to create more such videos. That's all in this video, my friends. But before signing out, I would like to say the golden words. Keep learning, keep growing, keep getting better every single day. Thank you. Namaskar.